So, Johnny, there seems to be somewhat of a race to see who's going to launch the first Bitcoin Exchange Traded Fund.
Well, yes, we've just had the news that Fidelity have just made a submission to launch the Wise Origin Bitcoin Trust, which is an exchange traded fund, an ETF, and it's waiting for SEC approval. Interesting to see the ETF market now has approached an incredible 7.7 trillion, nearly $8 trillion worth of funds under management. And it's enjoyed huge success as many of the passive funds, particularly the institutions been investing in, have struggled to outperform the passive ETF type funds. And actually, ETFs charge considerably less fees, which is a major consideration. But Fidelity aren't, as you correctly say, they're not the first traditional financial service company to try and launch an EFT. We actually saw recently State Street that have got something like 38.8 trillion in assets under custody and about 3.5 trillion actually under management. They actually were looking to launch an ETF based up in Canada. So it's interesting whether we're going to probably see the same sort of progression in the sense there's going to be more funds than there are cryptos. Bear in mind there's 6,500 cryptos because that's the position we have at the moment. There's more mutual funds than there are actually stocks or bonds quoted in the world. And the question really is how long before the traditional financial services start actually buying some of the many FinTech disruptors in order to get a toehold in an expertise into this digital asset sector. And without doubt, seeing FinTech companies building infrastructure, companies like Monsas, banking and custody, Arrow, capital asset management, Novin Insights, giving sort of crypto analytics, and Alico, who are offering forensic due diligence. Really exciting times for those who are informed, as old business models are always certainly going to change. But I suppose the challenge is how ready, if you're regulated, are you?